Next, we're going to be talking about how we need to align revenue with our productivity and why we need them to be working together to drive GOP. So for that, I'd like to welcome to the stage our panelists here. David Goodman from Duetto. Joe Pettigrew from Starwood Capital Group. Hans van der Biesen from Thun Hotels. And Paul Harnedy from Cedar Capital Partners. Welcome, everyone. It's so exciting to have you here. Wow, what a panel, what a panel. I'm delighted to have the honor to moderate this. Let's just move this lectern a little bit out of the way so we're a little bit more comfortable. Okay, and let's approach this topic. I mean, we've seen from the data that Catherine's shared with us how our margin can be very easily impacted by costs, although ADR is still carrying the heavy duty of it. But I think it's clear that we're flowing less and less profit to the bottom line. So what's going to be really important is how can we really align revenue and productivity to manage our resources and avoid wasting them? Because at the end of the day, we can drive as much revenue as we need to, but if we forecast very boldly, if we forecast too much revenue, what ends up happening? We're planning too many resources, which ultimately we're going to be wasting. Imagine that we have a forecast of being at 80% occupancy, and we're deploying the full team to help us deliver the excellence in the service. And we have a scenario where things change abruptly, and we're possibly at 60% occupancy, but still we haven't managed that planning. So what happens there? We have a wastage of about 20% because we've used our complete resources without really making a big adjustments, and that directly impacts our profit margins. So what we really need to understand is how can we control the outcome and not be surprised by it at the end of the month. And I remember Hans and I were talking about this, and that was a big aspect. You know, we don't want to be surprised by what's in our P&L at the end of the month, but we really want to be able to control and anticipate it. So this is where resource management falls into place, and revenue and productivity become such key enablers to ensure that, you know, all of our strategies converge really to increase the profitability in our hotels. So we've seen a little bit of the state in play, what's going on in the UK. How do you feel that? Is that reflected in your businesses? Do we see similar sort of patterns? What's happening on the books? How much profit are we? How our GOP is trending in, and how we're doing from a future demand perspective? Joe, would you like to have a go at that?
Yeah.
We can hear you.
I think you see different results at different markets, obviously. When we look at our portfolio in Europe, they're predominantly in the UK, and thankfully most of them are in some really, you know, getaway markets like Edinburgh and London. And in these markets, thankfully, because of all of the international demand that we see at these markets, we have seen a tremendous growth in rate, and although the cost has creeped up on us, actually, we are having record performances at most of our properties. Although now looking ahead for next year, we're probably not, you know, looking at so much growth. But in the whole, yes, in some of the regional kind of UK markets, where those hotels have traditionally relied on sort of the domestic leisure travel and or groups and conference and other events that were taking place, those hotels have been hit quite negatively by the creeping costs. Especially this year, they were doing phenomenally well up until last year, but again, this year, if you look at all of the kind of domestic travel contribution, they've all been, you know, all the Brits were going out overseas, and they weren't, you know, staying in Cotswolds this year anymore, while the costs have continued to go up. So I think there's a bit of a disparity between what's happening between the regional UK versus what's happening in main cities. The main theme is right, and the cost is consistently going up everywhere, but depending on your market, the ADR is making up for it in some markets like London, where it's not in some of the more provincial markets.
Thank you for that. Paul, what about you?
Yeah, hello.
We can hear you.
Morning. Very similar. Performance across our European hotels is very strong in revenue terms. It's also strong in profit terms, but to Catherine's point, it is marginal gains on the bottom line, given the growth at the top. Pace remains really strong, albeit, and touch to Joe's point a little bit, it's driven by leisure. The transient business is still very late lead. Q1 2024, MICE is looking particularly strong, business on the books, which is giving us some confidence going into next year. We haven't seen that strength of business on the books in the MICE segment this year. So going into Q1 next year, there is some real confidence in our hotels that do well from that. I think of concern is that OTAs continue to grow in terms of their share of the market versus direct channels, which is my challenge to the brands that operate the hotels on our behalf. But we see a plateauing of rate into next year, but we believe it will remain strong. In terms of total revenue, which is, and we'll come on to talk about that, important. Across our hotels, at least, we've seen no impact of cost of living on the incremental sales. So the additional layered revenue from that strong occupancy and the type of guest is generating good returns across golf, wellness, and food and beverage, interestingly enough. So yeah, it's a good picture. Quietly confident about 2024.
Exciting to hear that. Exciting. Well, we'll go to Hans to complete a little bit the perspective, right? What's happening in Central Europe?
Yeah, pretty similar, I think, for Brussels, where we have seen big growth in ADR. Occupancy is still not on the level from pre-COVID of 2019. Particular issue for Belgium is that we were obliged to higher salaries, 10.9% in January, because in Belgium they're linked to the inflation. So yeah, the prices grow, but yeah, if something like that hits in, not speaking about all the other raising costs, that's obviously an issue. We also had delay we saw in Belgium compared to countries in South Europe. I think typically these holiday destinations after COVID were the first thing before getting back to business, maybe. So we had like an 8-month delay compared with France or other Southern European countries. Another trend we see, and I was happy to hear from Catherine that at least hotels are now more sticking to the contracts, contractual obligations, because cancellations are really more and more than before. We see more cancellations once something is happening, or people just change last minute, etc. So that's also an additional challenge, I would say, from pre-COVID times.
Mm-hmm. It'll be interesting to hear from David. Obviously, Duetto really aggregates a lot of data across the board and is seeing the global picture. Any specific highlights that you'd like to bring up?
I think it really varies by region, but also by hotel type as well. I think Catherine mentioned earlier the strength of extended stay. I think that's something that we've seen throughout the past 3 years, and we're seeing that continue in terms of number of rooms coming to market and actually how strong the performance is as well. But overall trends, I mean, I'm very fortunate. I get to speak to hoteliers, revenue managers, commercial leaders most days. I would say it's overwhelmingly positive. I think it would echo what the gents have said here today. But I think there is still some uncertainty around rising costs moving into 2024.
And that's where we need to get more visibility, don't we? I think, Paul, obviously with Cedar Capital Partners, you've been investing in hospitality for over 20 years, luxury, full service, lifestyle. to get to these results and to have this level of confidence that you have, how important would you say is the revenue management organizational culture in really driving this performance and creating the value?
Do you want one word answer?
That's it.
It's
we just
critical.
want
It's
people
critical.
to know.
And look, I spend, I'd say probably 70%, if not more, of my time speaking to our operating partners about the commercial strategy for their business. Traditionally, you spend a lot of time looking at the middle of the account, and I'm not discounting that. But it all starts with the revenue. It all starts with the commercial strategy. And I think sometimes we can overcomplicate it as well. The simple metrics are best, and we'll come to that later. I think rooms is always going to be the key profit driver in the hotel business. And we should never forget that. And the whole strategy around that and the key decision making is vital to the success of the business. But it isn't just the job of the revenue team. It has to be organisationally and culturally an effort between revenue, the outward-facing sales teams, the operators in the business, and the finance teams, because the strategy has to be profitable. And you have to understand, and Catherine put some interesting slides up earlier, what is driving the best optimal mix and profitability. You need tools to do that, but you also need an understanding of what drives the best total revenue, but what total revenue drives the best profitability in the business. So it's always been critical, but it's more critical today than ever before because of those rising costs that we spoke about. I love the slide on wellness and on golf. We've got a lot of wellness. We've also got a big golf resort, and I concur they are driving fantastic total revenues in the properties where we have that. And in one property, golf is worth almost £1 million a month to us. That is a revenue centre all of itself and needs a strategy of its own, but that strategy needs to be completely linked and in sync with the room strategy, because rooms are dependent on golf and golf is dependent on rooms. So no more ever so than today is the revenue, the organisation, the structure and the culture of revenue management across all revenue streams in your hospitality business is everybody's responsibility and more critical than ever. So I could give you one word answer or a few words.
We needed the few
that's my view.
words. We needed the few words so everybody sort of understands the complete picture. And I think Hans here, we talk about profit centers. We talk about how important it is to be able to empower teams to perform at their best. But there's an element to it, a very critical element to give that visibility across each profit center, which is the forecasting capability in each and every single department. You at Thun Hotels, you have you're such an inspirational brand in the Nordics, right? We'll see how you're the founder and the owner of the business turned 100 last June, right? So it's an incredible inspiration for the industry. How do you manage to achieve these high performance teams?
I underline what Paul said. I think it's a culture and a mindset you need to try to create, not only in the revenue department, but through the sales, operational departments, through everyone, in fact, and mainly then the department heads. So we need to drill it down not only to the general managers from a property, but really to the department heads. To do so, you need really to create a positive culture. You need also to provide them with the necessary resources and support to do that. I often see for a newcomer, for us, everything is normal. It's in our DNA. We're using it for such a long time. But when we are onboarding new head of departments, we really need to create this mindset also for them. And the live forecasting itself, yeah, that's so crucial. It avoids so much, I would say, emotional calls, emotional decisions. You know, when in busy times, you often have the head of department come, "Oh, we need someone extra, we need someone extra." I think I can't even remember when I had the head of department coming, because they're controlling it themselves based on the data they have available. The targets are set together, and they can react instantly. Last week, Monday, unfortunately, Brussels was hit again by a terror attack. It has obviously immediately impact on the business. From the second it happens. So the next day, the live forecasting is adapted and people can react. And so it avoids a lot of emotion, I would say, and just based on the data they have available.
I think you speak so, I would say, not just so informedly, but so naturally about live forecasting. It's not something we have here in various other geographies, very present in our daily business. I think there's a model that we will approach today, which is why productivity, revenue and productivity management are so powerful together, and that was actually born in Scandinavia, and we'll see why. But this ability to have live forecasting, it's something that becomes crucial to be able to manage all those variables that we've seen with Catherine around costs, of course. So we've spoken about total revenue a little bit on ancillaries. We talked about how important it is to have visibility over those cost centers. We also have seen, and Paul has resonated, how consumers are really willing to spend and very much on experiences. But we also see, the F&B and spas and other, some of the outlets, not the ones that Catherine showed us, they do take and represent about 40 to 50% of the total income in our businesses. So many of these departments over the years have seen as cost centers as opposed to profit centers because they weren't really managed. And so this revenue and productivity culture, and to be able to really leverage the potential is critical. How we're maximizing the usefulness of that space in every single one of them. Joe, with Star Capital, global investment firm, over $150 billion worth of assets. You have brands under management. And you obviously manage quite a few of your properties as well. How are you seeing this ability to convert more of the revenue to the bottom line? How important is the analytical side of your team, of your revenue managers, to be able to get everybody together and design those strategies together with the heads of departments to maximize ultimately that experience for the guests, but how much they spend in every single one of your departments? What are you seeing there?
Yeah, I think because of the rising cost, we have been focused quite a lot on sort of the profitability of every room nights that our commercial teams are putting into the hotels. I would say the biggest difference in the practice that we're doing out in the fields today is where traditionally the revenue manager or the salesperson or the marketing person's job ended at the point of the revenue booking into the hotel. We're now essentially challenging them to follow that guest all the way through till checkout. And when you do that, you have to put your analytical mindset not just on how do I get the right person into the right night with the right price and the right channels and so on and so forth. You also get and then how do I get that person to, check in at the right time and checking out at the right time and eating at the right place, ordering the right things, and actually going through the entire journey. That does require a significant investment in technology. So, we're able to do that at some hotels, but not all hotels. But we're able to do some robust sort of a guest acquisition planning with the hotels that have the right technology in place. Where we don't have it, we still challenge our teams to essentially break out our total revenue, rooms, F&B, and other and miscellaneous revenue by market segment and by channel. So at least for example, that the corporate guest that comes in at a 20% discount to your rate, spends more money in the bars and restaurants than your, leisure guest who comes in at 20% higher rate, but after, all your cost of sales, they don't actually stick around in the hotels and do anything, and they eat out and everything else, and they go home. That behavior is actually very different hotel by hotel. So that could be true where corporate guests are spending more at the hotel versus the leisure, but it could be completely different at the other hotel, where, in the same market, for whatever reason. But actually having that data and challenging the most analytical folks that we have at the hotel teams to drill into that level of detail is really making a lot of difference. So that has got us thinking about, obviously corporate is a very obvious example, but also with groups. Do we take in groups or not groups? There, sometimes when the revenue managers especially are obsessed about the STR benchmarking with the RevPAR and the RGI, and they're like, well, if I take that group, then I'm going to be hit on my RGI, but actually, you layer in after all of their spends that they're going to have at the hotel, at the bottom of it, we're going to be far better off. But that has implications to their comps and bonus and all of these things. So it's a huge project actually to try and build this thing, rebuild the whole paradigm of how all of the commercial teams have been interacting. But that is where a lot of the focus is. And even if you think about like just the rooms revenue alone, not just on the ancillary revenue side, getting teams to look at. So for example, all of the systems that the team uses, whether that's revenue management system, CRS, or whatever it is, Rate Shopper, the default view of your pricing is always a one-night price on a arrival night. That's and so we often say, oh, what's your price? We always mean, what's your one-night price? Room-only rate, bar rate. But changing that default view to say, I want your default view to be a 3-night total sum. Not a 1 night, but 3 nights, 4 nights. Because that is the demand pool that you want to dominate. Not a 1-night bar stayer, but a 3-4 night stayer who's actually helping you with your shoulder periods. Because that has an impact to your profitability, how much you're servicing, and so on and so forth, and how whether they're going to spend money at the hotel or not. Or, for example, just one last example that I'll throw out is we have some hotels which are part of a global brands where we have to offer free breakfast. No other facilities on site. So we don't have spa or restaurant or meetings or something like that to leverage at these properties. But we still challenge the teams to do the same exercise, because what one glaring example that you find is, again, you can get a leisure guest coming in on a peak weekend in Edinburgh paying, I don't know, £400 or £500 a night to stay, and you think that is a great number, our RGI looks smashing. But they come in with 4 people and a family, and they all go crowding out our breakfast room, and the food costs have gone up 30%, and now you have to service 4 people in that room, and everyone else is upset because you can't get a seat in the table, so your review scores start to tank, while we're kind of yielding out all of these other whole segment of solo travelers and the corporate guys who the rate might be 20% lower, but actually it's just one guy who often don't even want the breakfast, just want to go and grab a bagel and is on his way out. Just far better operationally. It helps us with review scores. It sets us up better for the future. And it's just changing the dynamics of how we're talking about revenue, how to, and what kind of customers that we need to get.
Wow. Hopefully that was really, really insightful for everyone here in the room. Thank you very much, Joe. David, Duetto was born in the casinos. Duetto had the total revenue and the total profit into the DNA of how it was born. How do you evolve and help hotels really maximize that whole revenue and ancillaries per guest now in the hotel business?
Well, I think Joe's just given a great overview and pretty much covered everything that we needed to talk about here. But no, it's great to hear these guys talk about it. If I use Paul's example about golf generating £1 million per month, that's a revenue stream that typically an RMS may not look at. How is an RMS bringing data into its platform, not to look only at room revenue, but total contribution by guest, by channel, as an example. And ultimately that boils down to, are we getting the right business mix? And that business mix is not just on rooms revenue, but the total revenue that they're spending. And so much of this is down to the integrations that the RMS has, the tech stack that the hotel has, because a lot of this data sits in so many different systems. It could sit in a CRM, it could sit in a PMS. I'm sure golf probably has its own system as well. You know, how can we bring that in? And I think looking at the Duetto example of working with casinos do this amazingly well. And Paul mentioned that rooms revenue is still the key driver for hotels. In casinos, it's not so much. It's player worth. How much is a player going to spend in my, or how much is a player going to lose in my casino, ultimately. And they really look at the worth of that individual. And that's not just on how much they're going to lose in the casino, but, you know, what are they spending in the bar? You know, if I can get a high roller coming in and they're going to lose 2 million in my casino in 10 days, am I really bothered about a $500 room rate? Not really. How do I get those guys into my casino? How do I keep them playing? How do I keep them losing, I guess, most of all? So what Duetto looks at and the way they work is actually, we look at the room rate as an element of the guest spend, and how can we ensure that we are getting, to Joe's point, the right guest into the property. And that right guest may pay a lower room rate, and I guess to Joe's point, and looking back at my on-property days, you know, you think, great, direct-to-brand booking, low cost of sale, loyal guest, this is amazing, you know, everything goes to the bottom line, but then they walk in with a supermarket carrier bag full of food and they don't leave their room and they don't spend anything in the restaurant, they don't even go and visit the bar, maybe they make a mess of the room because there's food everywhere, so it takes longer to clean. How do we factor all of this in? And Duetto has the ability to bring in guest folio data, which is a great starting point, because then you can start to drill down into what does each guest spend by channel, by segment. How do we then price to bring in the right guest? You know, you could take a golf group, yeah, sure, it's going to hit your RGI, but they spend a huge amount of revenue, not only on the golf course, but then they go in 25 of them in the bar afterwards and stay till 2 a.m, and you capture that spend as well. So I think it comes down to bringing the right data into the platform, democratizing that data, not only to the revenue manager, but also to the sales manager, to the golf team. So everybody feels involved in that process. They have an input into the strategy and they understand how they contribute to the overarching commercial strategy. I think if you get that buy-in from every individual, that makes the revenue manager's job far easier, saying, hey, I'm going to turn this group down, and this is the reason that I'm going to do it. Or, hey, I'm going to close out these non-LRA corporates, and this is the reason that I'm going to do it. But you need to have the ability to bring that data in, make that data easily accessible, and then price according to your commercial strategy, taking into account total spend of the guest.
And then you have a very good picture of what your revenue is going to be like. You're able to really manage how you're going to forecast your revenue. Now, how do we align to that revenue forecast the resources that we put in? Hans, I go back to you here because productivity and cost management go hand in hand, right? From a productivity management standpoint, you get that broken down picture of every single profit center, not just whatever that goes into the RMS picture, but actually everything that sits into the P&L in real time. So how are you able to use that data to help you really focus on the margin? And obviously, we've seen how the labor and the energy and distribution costs are really eroding into that margin. What is the KPI that helps you get to that productivity level that actually, you know, flows a lot more of that revenue to the bottom line?
There are different ones, obviously. One main one for us is the RevPol, is the revenue per worked hour, which we monitor closely. I think we'll come back to that also later on.
Bear with me for a second. RevPol. Has everybody heard of RevPol here? Okay, we've got one person in the room. It happens to be and related to Scandinavia. So RevPol, please explain what that stands for and how it's being calculated.
It's the revenue per worked labor hour, I would call it. Which you set targets, and you can follow again in the live forecasting, so you can follow it on a daily basis to ensure your financial target at the end of the month.
And that means you're looking at a total of your revenue across every single one of your profit centers.
Yes.
Divided by the total number of paid labor hours.
Correct. So it allows to allocate the right resourcing, I would say, from labor on everything, and again to react proactively on it. Now again, I think the revenue is extremely important, and I hear some really nice things again from Joe, which I totally underline. Personally, I would call them more profit managers. I don't like that we call revenue managers because creating revenue, I think a lot has been done the past 10 years, 15 years, and I think they're doing a great job, just to be clear, no misunderstanding about this. But again, the data is so crucial. I had a big discussion last week because we are in the season of where we need to extend the contracts, and I had the LRA contract, and when we analyze, they only booked on the busy days, where I had then to give the standard room instead of the business room. I'm sorry, for next year, they will not be LRA, or they really need to pay a different price. And this is something which, yes, you feel then towards a sales department, for example, or the account manager from that account. It's not always easy to explain why he will potentially maybe lose a client. But the data were and things. So it's understanding your revenue, and then obviously the costs control with the RevPolu that covers the labor. This being said, it's maybe contradictory, but I also think that one of the highest underestimating costs is the money we lose on our staff because we don't train them enough, we don't retain them, and all the time they're leaving, and we need to hire new. So I also think, on the other hand, we need to invest a lot more sometimes on everything about onboarding, retaining, and so this is different things. Purchasing, interesting topic. Could probably do a seminar a day just on purchasing. At 2 hotels in Brussels, it's about volume. We're a big player in Brussels, but we can't do it alone. So we are working with other international chain together, so to create more volume and have a better price on the goods we need to buy. Energy management, technology investments. Yesterday, really crazy when it's my first time in London after COVID. I take the Eurostar in Brussels. There is 4 people putting. You need to put your belongings in a bag. And then the guy went after the security machine. There were 4 people standing there to put them back in the lane. Can you imagine this in 2023? That's about productivity, about how you... So I cannot imagine this anymore to see it in 2023. I don't know when at an airport I still saw this, that there was a lady or a man putting it back. So this kind of things, obviously, technology can help us big time also in these different topics to control the cost side.
Wow, I think that was a lot, right? So, but it really helped us drill into how important it is factoring in and controlling, managing that cost. So I don't want to extend it any longer. I just want to thank you very much. That was incredible input, and hope everyone has enjoyed it. So thank you so much. Catherine? Yeah, oh yeah, sure. Sorry. Just to move the slide. All right, well, we continue. Next, we're going to be talking, I mean, we've seen how important is aligning revenue and profit management and productivity together. Now we're going to go into more detail to see how do we align revenue with marketing and our guest intelligence data, and how important personalization really is to grow the total revenue, but also to improve the experience that our guests can have with us. For that, I would like to welcome to the stage João Freitas, Vice President Partnerships for Host Group. And then Yogesh Ram, Head of Marketing, the Athenaeum Hotel and Residences in London. And we're hoping that Hisham is over here with us. He is. Happy days. Hisham Beniptri, he is the founder of Userguest. And last but not least, we've got Agustin Kakot, the Vice President of Demand at Yotel. Well, welcome everyone. So excited to now move into the RevMarketing bit, right? We've seen numbers crunching and productivity. Now it's going to be quite interesting to see how we can leverage personalization, how important it is in us being able to drive those revenues. It's been proven that companies that excel at demonstrating this intimacy with their customers, they certainly grow much faster than others. And the closer hotels get to the consumer, the higher the profit margin is as well. 71% of consumers actually expect companies to provide them already personalized interactions, and those that don't, they get over 76% actually get frustrated. So with those numbers and that data in hand, we'd like to discuss some of the really good practices that we're employing today in our business to drive this growth and increase our margin by providing a much more personalized experience. And this is where RevMarketing strategies become really front center on how are we going to be evolving that journey from the sale of a room to a total revenue and customer lifetime value strategy. It'll be great to just zoom into personalization. What is personalization? And we all know it's very much a marketing challenge, isn't it? And it involves a lot of analysis, and it involves a huge amount of technology to really be able to achieve that. Yogesh, personalization at the Athenaeum. What does it mean to you? And I know you're working on this big project where you're connecting everything into a data lake. Tell us more about it and what you're trying to achieve with it.
Hi, everyone. So personalization for us, really has been about our brand pillars, really. It's a key brand pillar for us, and we call it Stay Individual. And we've been doing personalization really without data. So we've been trying to sort of do guesswork about who our guests really are, what they're staying with us for, and trying to kind of, use the right amenities and the right products in the rooms, the right toiletries that they may be interested in to kind of make the stay more luxurious. We're dog friendly, so if we find out that the guest has a dog, we try to use luxurious, stately hound products that can enhance the stay, because we know, dogs that are coming to the hotel are just as important as the guests themselves staying in the room. And so that kind of personalization piece for us has really just been about, we kind of know our guest in the sense of, pre-arrival forms, or trying to capture data about their stay as much as we can. And the challenge really for us has been about not really truly understanding our guest. And just in terms of the sort of project and the data lake that we're building, to give some context, we split from a group level and became totally independent. And what that meant for us is that we lost control and access to a lot of the systems where we had been building up data about our guests, sort of sales at Delphi with sort of sales data, meetings and events data, even as far as kind of our PMS system. And the challenge for us is that we were going to lose just the sort of activities and the data that we had been building up and lose the complete picture of what the guests truly look like. And so what we did was that we kind of took that on board and said, well, how do we make sure that we can extract whatever data we can, as much as we can, and bring it into one centralized place, a single source of truth, essentially. And the challenge for us has been, number one, which is getting access to the data. You know, in 2023, some of these solution providers don't even have APIs, public APIs that are available to kind of automate the data flows and kind of, you know, put that into a data warehouse for us. And so that's been a big challenge, a big kind of learning experience of creating principles around when you select a new provider, make sure that one of the principles is that you can actually extract the data that you're building and putting in, essentially. And so when we're selecting new providers and going forward and thinking about new technology, that's the number one thing. Can we get our data out that we're putting in the first place? And then the second thing is, can we then connect it to our data warehouse so that we're then having a single central source of truth and building up a layer on top of that, which is, or you could think of in terms of the analogy that I use is your data warehouse is almost like your brain, right, of the business. Your PMS is your beating heart. You have your brain of the business, which is the data warehouse, or you could call it a customer data platform, where you create data pipelines, you know, a bit like sort of the neurological pathways that connect between different systems. And then your tools become your enablers, you know, so where you are visualizing guest data and guest profiling data, like your CRM systems, that becomes an enabler for you to then take that information about your guest and go and try to create partnerships. For example, with us, we created a partnership with Molton Brown, a luxury toiletries brand. It could be targeting those guests, knowing that they are coming from a specific geography, you know, with a specific booking window, you know, and they're booking on a given channel, and you would target them on those. And so that's been quite a long journey. We're still on that journey at the moment, but for us, that's what personalization really looks like, using data to understand truly who is the guest profile that you're trying to target.
Wow. Okay. We've set the scene here. All right. Joao, how do we make it happen, right? Host group, you've got all the technology to get to that view of the consumer. From an operations standpoint, how can we get that level of intimacy, of knowledge about our customer and really figure out what makes them tick? How can we really personalize those experiences to make them a lot more memorable? As you know, Yogesh is saying, is something that will stay with you because, you know, we've created a wow factor. We've really surprised them. You know, what information do we need, and how can we make that product, that experience and product a lot more relevant? Tell us about the technology and how it connects your data at an operational level standpoint.
Well, good morning, everyone. So starting by the thinking of creating a data lake, we went a couple of years back, and actually when we are starting to develop our systems, we develop everything in just one database. So actually the client is literally the same in all the places because it's literally the same system, like it's just a model perspective. So at the end of the day, it's much easier to make the matches and understanding who is who. But a part of our system, because it's not the goal to talk about our own. Regarding the data lakes perspective, and we have a lot of hotel chains that have exactly the same kind of challenge. Sometimes they even have different PMSs because of having international brands. So actually sometimes it's not only us. One of the things that we started to do is to develop solutions that we can literally be the data lake provider. So meaning we work on that in order to make sure that we can, even when it's not our system, making sure that the clients can do whatever they want with the data. It's not an easy conversation for several reasons. Most of the times, we don't see hotel chains with that capability. So meaning you don't find people in the other side that can do it. So I guess in the last 2 or 3 years in the markets that we are present, we have been in a lot of discussions about that. But talking about personalization, I guess that by the end of the day, we before starting to know who is our client, we need to start to understand how we are targeting actually, right? So I guess that Userguest will talk perfectly about it. But most of the times, the PMSs have a huge lack of information because of the information that comes on the top, meaning from the CRSs, from the channel managers, even from the booking engines. I tend to say that when there is a problem with data in the PMS, I already know that I will receive a call, but sometimes it's not my fault. I always tell the same story. A couple of months ago, I was discussing with one of our best clients from Iberia, and he was saying, "Oh, João, we have a booking engine. The booking engine is a loyalty program. I don't understand why you are blocking the loyalty program." When I heard blocking, I was already a little bit like, come on, someone did a mistake. Actually, I was hopefully, it was not my fault. It was from the channel manager, and actually, the fight was on the channel manager against the booking engine. So basically, the data was not flowing because they were blocking the data. So because they were also a booking engine provider, and they didn't want to pass that. So what I'm saying is that we are always discussing the PMS role and being open, not being open, but we don't control the flow. And most of the times, the data comes on the top. We are just the end of the funnel, right? So we need to have to provide solutions for the guest experience, but we cannot do much more than that if we don't receive the data accordingly. And just a note, we see a lot of big brands on the channel managers and booking engines talking about APIs and connectivity, and sometimes seems that we are just joking, okay? Because we are not talking the same conversation. When you talk about APIs, I guess that I'm taking the role of the PMS, like everyone complains about the PMS, but actually the problem sometimes is not exactly the PMS because we are not in that position. We need to receive the data to provide data as well. But apart of that, in terms of personalization, I guess that in the last 2 or 3 years, we start to provide more and more solutions to interact with the guests, from the web apps to the personalization of the check-in and put it more and more online, or even in terms of the payments itself. Because when you talk about personalization, most of the times people don't have time to do it because they are concerned with, a lot of process. Even in the last couple of days, I've been traveling in different countries, and I never spent less than 10 minutes or 15 minutes doing my check-in. It was not our clients, for sure. But apart from that joke, people were just talking with me about my credit card and my passport or my national ID, and a lot of discussions about the credit card not working. I tend to say that even in terms of paying, I don't know about you, but every time that I need to pay, especially if it's international, I'm always fighting with the credit card when I already inserted it. Why people are asking me? Come on, there are so many solutions in the market. So the point for me is, before talking about guest experience, we need to understand what people is doing with our systems. And most of the times, we have people spending time with things that don't make any sense, right? We are not talking about the hotel of the future. We are talking about people just doing repetitive tasks. So when we talk about personalization, our role, I would say, as a system provider, is making sure that the system is fast, it's easy to use, that implies that people don't need to interact too much, and just give the moment to speak and to say something. And just a small story, a couple of months ago, I went with you actually to an event, and I never forget that I just entered the room and I had a simple letter saying, "Hello, João, it's awesome to have someone like you, super expert in hospitality in our hotel," and blah, blah, blah. I was saying, come on, the person that wrote this spent 2 minutes, but the 2 minutes was just super easy to understand. They knew what was my rate, what was the event, and just there was a person going to my LinkedIn, doing the match and writing something like, "You are an expert in blah, blah, blah." Of course, by the end of the event, I just took a photo and put it on LinkedIn. That is the best marketing that you can have, right? And it was super simple task, like 2 minutes. I don't know who was the girl.
But I think it's connecting that data. That is what it comes down to, that challenge. And I think you have such an important role of being able to really integrate the client's profile into the operation. How we communicate with reception, what information are we able to make available to them? What about the call center? What about the asset management level, the experience that the guest has had in the past? How any friction, any levels of joy that we've been able to achieve for them. All of that information is extremely, extremely valuable. Well, you've preempted. We're going to be talking about the direct channel and direct sales strategy and how important it is to invest in brand.com. And we've seen benchmarking data. We've seen the retail channel with Catherine. It's really picking up greatly, and also, direct bookings is such a huge opportunity to drive ADR in the direct channel, but also margin, because ultimately we're paying a lot lower cost of acquisition. But the opportunity that it's very, very sizable is to curate our own customer base. A customer base that we can really accompany throughout the guest experience, and we can really personalize let's say, their experiences throughout their lifetime. And you might have a customer from Booking.com that's very loyal, but that Booking.com as a channel has a huge portfolio of hotels. So it may be your customers for the first time, but will it be your customers second time around? But if a customer books directly with us, it's a very different business proposition. And we'll see when we talk about loyalty as well, how it impacts our bottom line. Augustin, Yotel. Yotel is an incredible brand, a global brand, lifestyle brand, a really strong focus on, direct channel and being able to generate and convert that guest as they navigate your brand, as they come onto your website. And I know you, as a company, you've got very strong DNA. I mean, we've heard Joe Pettigrew talk about practices. Obviously, Yotel is a brand of Starwood Capital. We know how much you invest in technology and how you actually have special projects where you have money put aside to produce your own technology. But if you can't find that technology off the shelf, obviously maintaining it, it's a lot less of an effort, isn't it? So, Anne, your role as a VP of demand, how important is for you to connect the e-commerce strategy, how we reach, how we convert that customer, but also tap into the revenue priorities that the actual hotel would have and their strategy?
Sure. Is it working? No? Anyway.
Yeah.
I think it's quite complicated, to be honest, but that's okay. The thing is, the digital marketing ecosystem isn't built for hospitality. It's really built for retail. So you're looking at, your Amazon as you want to sell as many, tables and chairs or whatever. Maybe not tables and chairs, but whatever people buy on Amazon. And it's a game of volume. So we have a perishable product, and I think that is the key difference, is that there's not really, apart from meta search maybe, but there's not really an area where you can say, I need to sell, Sundays in February. And so I think you need to sort of take the problem backwards and look at lead times per specific countries, per specific marketing channel, and then spread your spend in a different way. So there's a lot you can do. And I think, Userguest, for example, has a concept of demand by stay day. And that is something that is Duetto also has a similar concept. And I think the two work, well together, where you're trying to understand, when people visit my website, when are they trying to stay? And I know it's a silly thing to say, but actually, usually you can ask most e-commerce teams, they don't really know, and they don't really care that much because it's not their incentives. It's not, it's just people build what they're, told to. And so if you're trying to market empty rooms and not rooms that are going to fill anyway, it's actually a lot harder to connect the dots. And obviously, then, you get, if you're booking a hotel in Boston and you're sitting here in London or you're in DC, you have a very different behavior and lead time, and so it gets more complicated. And I think that the main limit to it is that most hotels are quite small, and it doesn't matter if you have 1,000 bedrooms, that's still small, because that doesn't, very, very quickly, when you divide your data in too many pieces, then you just can't do anything with it. Because even if you have 1,000 bedrooms and you're looking at people from Mexico trying to book coming from Facebook, that's not enough people for you to make statistics with. So you need to be a little bit clever about how many divisions or many dimensions more is too many. But I think that's how you approach it.
And obviously the how important that buying behavior is, and align it to your strategy on how you can convert it in relation to those occupancy gaps or days becomes quite critical. But also communicating with the guest your value proposition. Obviously, best rate guarantee, everybody wants to get the best rate guarantee, but what else are you facilitating within that conversion conversation with the guest that makes them transact through your website as opposed to, flowing back to or bouncing back to where they come from? We're talking about this concept of personalization in relation to what their intent to buy is. What are you trying to achieve from them? How do you have that dialogue?
Yeah, I think I've been working a lot on this, and the challenge is that personalization, if you go to the big, you go to Salesforce or the sort of big guys that are in, not just specialized in hospitality, again, personalization is around, you just bought a chair, so maybe you'll buy a table too. And that's great, but we can't really say, you just look at Boston, so maybe you want to go to Tokyo, because it's just not how it works. So the way we've been using personalization in the beginning is to target lookalikes. So it's to say, if I know that people who like tables are likely to book my hotel, then I'm going to go and target my ads at people who like tables. And that's step one. What we're starting to work on right now is also trying to provide a different customer journey based on attributes of a person who's visiting. And so that means that right now we're running big A/B tests on our booking flow, and we have a search bar with dates. Do we want to keep that? Do we want to have a book now button? Where does it need to be? And various configurations. And it turns out that the results are really contrasted. And that's an area where we're thinking, if we can identify types of people, types of geographies, types like age groups and all of that, that respond differently to different booking journeys, then we can personalize the website version that we're serving to people, and that is, I think that's where it's not so much in terms of products, it's in terms of trying to say, well, we know that people in their 20s convert 3 times as much on mobile as people in their 60s, for example. So that we know already. So we want to pay more money for these guys. But it's not just paying more money for the marketing. It's also then providing a different booking experience, and then there's the whole conversion where we use Userguest which we can target by specific countries, where we can make specific offers for lead time countries, push specific lower demand days and so on. We use cashback, so we literally give 5% cashback to people, so that especially if you don't pay with your own money because it's for work. Imagine if you come every Tuesday to London and you get 5% back, and that pays for your holiday, right? So we do a lot in terms of just making the website faster, easier, more personalized, but also providing incentives to book direct. But I think the personalization is the hardest bit of it, because again, it's not that many brands that have a completely different product to offer because you're a different person.
And I think it's how do you communicate that incentive? It's where, where the conversion really triggers. Because if you have such great initiatives, but nobody comes, nobody's really able to spot those literally at a glance, because you've not identified that person that has that drive or has that intent, you're not displaying it to it, you've effectively lost 80% of the battle. Hisham, obviously, availability, to Augustine's point, is such a critical concept, and it's a very powerful conversion tool for OTAs, right? Your background coming from Expedia, you know all about it, and I think the fact that you've built a technology that's subject to your necessities as a hotel, what availability you've got to offer, and really drive those people to those dates, it becomes a really powerful tool. How can we use that to then personalize? Personalization is possibly a very big word, but to match that lookalike behavior, like Augustin was saying, how can we use that, to drive that direct conversion?
So there's, well, so many different ways to look at it, the personalization. So depending where you are in the funnel. So obviously, if you're way deeper in the funnel, somebody that's already stayed or is staying is an actual guest, way higher level. If you're way up in the funnel, you don't know exactly what people are looking for. So then it's hard to have something very customized. What we try to do is we look at a couple of things. It's the aggregated booking behavior data, booking intent, try to predict that part. And also we have a direct link to availability. So the way we look at it is the website is kind of a marketplace. The hotel websites where demand and offer meet. And you're not always willing to sell everything at the same price or not as desperate. So that's a bit how we look at it. So we try to predict the demand that's coming to the website. People probably looking at this dates, looking at data, it's not 100% accurate because you cannot predict 100% what everybody's, what they're trying to book. But markets do have quite a strong behavior, common behavior, booking lead times. There's strong one dominant behavior in general, at a market level or segment level. So that's how we try to look at it, is understanding the behavior first, and then linking it to availability. From the hotel perspective, that's your kind of the supply. How desperate are you in that specific moment? So if you're looking at a very short lead time, you need to incentivize people more to book your tomorrow or Friday. I'm 50% empty. I need to be a bit more aggressive. And so to that specific segment, I need to personalize a bit more my offers, very last minute, I'm willing to give way more. Versus a month from now, it's Christmas time, people might visit a bit more. So you have a bit more flexibility, you can have different type of scenarios. They need to adapt to your demand. And depending on your level of ability, sometimes you're willing to give way more, sometimes way less. Or sometimes you can actually get the most out of it. So that's really, from the availability perspective, how we look at things is really supply, demand, and how we can push as much as possible users to book what we want them to book at times that we need it the most. So that's one way kind of to look at what we do. And from a booking behavioral perspective, how we can link that to revenue. So it's very much, we're a marketing tool, but we try to have very much revenue perspective, be as pragmatic as we can be, is as soon as you identify the booking behavior, how can you make that a bit more profitable? So domestic market books, probably all countries in Europe.
20, 30 days, roughly on average, lead time.
But mostly what they book. So when everybody that comes to London from a domestic market, they probably stay a night, maybe 2. So you book your average stays 1.2, 0.3, applies to London, to Paris, you name it. So you understand the behavior. How can we make that a bit more profitable? So use marketing to persuade people, your visitors, to have an even more profitable behavior. How can we push them to move that domestic market 1.5 average to 1.8? That has a huge impact on P&L. So throughout the year, that's really a bit the way to link how we are linking marketing, incentivizing profitable booking behaviors, and that links directly to revenue. That's how we're pushing it, and how we're looking at instead of being very much an e-commerce tool, but we prefer to be perceived as a revenue tool. So be pragmatic, use marketing to get more revenue and more profit, and push people to have a more profitable behavior for the hotel.
Effectively, you're bringing the revenue priorities, the revenue strategy with the marketing communication. So you're integrating them and you're automating that whole process of crunching the data, identifying those behaviors to then sort of like serve the content that's most relevant for the guest. So let's say personalization at scale, as we would call it. And now, if we move more towards loyalty side of things, obviously loyalty is a very important area, and we don't want to talk necessarily about points. It's sort of like a very old conversation, but we do know that it costs us 5 times less to acquire an existing customer than a new customer. So if we look at the cost of acquisition analysis, we can see that there's a 50% reduction of cost of acquisition. So it becomes a very important area for us to focus. And 76% of consumers here in my stats indicate that receiving a personalized communication is a key factor in driving their consideration of a brand. 78% say that such content makes them more likely to purchase again. And that's from the McKinsey Next in Personalization report. I think that's a very, very important data for us to take into account. So the risk of non-personalizing communication is obviously very important to take into account, right? When we look at the future of our businesses. I mean, Yogesh, obviously you're building that whole ecosystem to make it happen. How would you use personalization as a tool to drive that loyalty at the Athenaeum?
So, I mean, there's a couple of different things to think about here. One of the biggest challenge for us was really defining loyalty, because at the Athenaeum, over the years, we've had loyal guests who continue to come back with us and stay with us. But what we really tried to understand is, what does loyalty look like? And trying to get data from our PMS system, Opera, was pretty much impossible to try and quantify what loyalty looks like. Getting data out to the PMS was a completely different figure to what we had, calculated based on the data that we had. And so with the data that we've built up in our data warehouse, it does some clever things, kind of advanced algorithms to clean up guest profiles, whether it's addresses, whether it's missing email addresses from one system and there's an email address in another, marrying up the two, or it's country codes missing on telephone numbers, and to kind of get real clean guest profiles. And so what that's done for us is given us the ability to say, okay, well, we have a bunch of data sitting there. We have a bunch of guest profiles that we can now start looking at. What does loyalty really look like? So now we can start asking questions of the data. And for us, when we sat around the table and we said, what does loyalty look like? Well, there were so many different variations of loyalty. It could be an American US guest that comes and stays with us every year for 4 or 5 nights for the last 5, 6, 7 years. It could also be somebody that stays with us, and we typically have long stays, 30 days, and they typically stay 2 or 3 months, and then they go away, and maybe they don't come back. Is that loyalty for us? Loyalty also is our corporate guests. They're coming back. We want them to come back and stay often. So that piece around understanding what loyalty truly looks like is part of the journey to getting to personalization, because there's no need for me to try and keep going back to the US guest and try to target them if I for a specific stay period, when I know they're always coming back in December and they come for their Christmas holidays. They're not going to come during their Easter holidays. And so there's the piece around which you mentioned, targeting lookalike audiences. So if you can identify who those guests are, you can then start to use customer match lists and lookalike audiences on social media advertising as well, to try and capture more guests that look like them, the guests that are loyal to you. But for us, one of the key things that we've done now is that with all of this data that's sitting there, we have created a bunch of dashboards in Looker Studio, really quite easy to use from a kind of end user point of view. And we've created these dashboards where we're now starting to test with we have a very famous doorman called Jim. He's a 6 foot, sort of 6'4" guy, and he's been standing there for about 25 years, and he's recently just retired, and our guests pretty much love him. You know, he's really famous for the Athenaeum. He's always in our main photography and stuff. And so he's just retired, and we thought, how can we utilize him, his knowledge of the hotel, his sort of relationship that he's built up? And so we've created this kind of data output, if you like, where we have now an understanding of what those loyal guests look like, from their contact details, email addresses, telephone numbers, etc., to the length of stay that somebody has stayed, the channel that they booked on, the number of bookings that they had, customer lifetime value, their F&B spend. And we're arming him with this kind of list of loyal guests to say, well, let's give each one of them a call. And let's make it personal. Jim knows them, he's seen them, he's welcomed them over the years. Jim is calling them, and he's going to have a conversation to see, the goal is they haven't stayed with us within the last year. So we're trying to capture them back, trying to understand why did they not choose us for their holiday this year? And how can we get them back? How can we create a personal offer for them, whether it involves something like F&B that they were particularly interested in, perhaps this afternoon tea, perhaps the rate wasn't right for them, and maybe there are many other factors. But this is really going to give us the understanding of who really are our loyal guests and how can we bring them back into the hotel. And it comes from really understanding who our guests really are, and that's really what loyalty looks like for us.
Wow, and I think that ties in very nicely with, you've already covered. We wanted to talk about customer lifetime value, right? So if 80% of your revenue comes from that 20% of your guests, your center focus on that 20% is incredible, and that is how you increase that customer lifetime value, because they come and stay with you again. You personalize it, you get them the services and the products that they feel most passionate about. Wow, that's incredible. Well, I think that was really, really insightful. Thank you ever so much for your time. It was really, really good. Big applause.